Hey, everybody. Welcome to the show. It's Monday night. It's Thanksgiving week. I am your host, Jason Krutsky. It is a great pleasure to be here with you all. Now, before we get started with our live charting show this evening, I do want to take a few minutes. First of all, I want to give a big shout out to all of our TrendSpider users, both old and new. If you've been with us for some time, we thank you so much for being a user on the platform and trusting us for all your charting needs. If you're new to the platform, welcome. Thank you so much for signing up. We do have a Black Friday deal going on right now. If you are not yet a TrendSpider user, we are offering up to 60% off on our yearly plans right now. So if you are not yet a TrendSpider user, now is the time. Take advantage of that 60% off Black Friday deal. It will only be available for a few more days. Next up, before we get started, we are giving away a three-month free subscription to the Elite plan tonight. For anybody who is viewing, who's tuned in tonight, you guys can all enter. For 3 months. If you're already a TrendSpider user, the additional 3 months, if you win, will just be tagged on to the end of your account. If you're not yet a TrendSpider user, you'll win 3 months. So if you'd like to sign up for that, there is a Google Forms in the YouTube chat. Make sure that you sign up during the show because we will be announcing a winner at the end of the show. So you'll have to stick around to the end to find out if you won. So again, there is a Google Forms in the chat to win 3 months of TrendSpider for free. So sign up for it and we will announce a winner at the end of the show. Now, let's jump into the show. We're doing live charting tonight. And if you've ever tuned into a live charting show, you kind of know how they work. Well, tonight we're going to be doing it totally differently. So this will be very fun. We've actually got a couple of guests with us instead of our usual one. We are joined tonight by Mr. Scott Redler and Miss Izzy. It's a great pleasure to have you two on the show with us tonight. We were hoping to have a third, but unfortunately Ramsey is sick this evening. So shout out to Ramsey. Hope you get feeling better real soon. So like I said, tonight's a little bit different. We are going to kind of deep dive in on just some really popular tickers. We're going to look at some of the futures contracts. We're going to look at the index ETFs. We're going to look at some of the bigger names that everybody knows, Tesla, Apple, and some things like that. And we're just going to kind of do like a little round robin. I'm going to be running all of the charts, and we're going to go back and forth from Miss Izzy to Scott and back and forth, and just get their thoughts on, what's going on all these charts. Maybe we'll get some trade ideas from them. We can learn a little bit about how they see the markets. And yeah, let's go ahead and jump into this. Miss Izzy, Scott, you guys doing good this evening? Both of you all doing well?
Thanks for having us.
I think Ms. Izzy's doing better. She has the northern lights behind her. I'm sitting in my Short Hills office with crooked signs.
Well, it's awesome to have you guys here. I want to start, if it's cool with y'all, I want to start on futures. Seems like a decent place to start. And I know we were talking before we went live, Miss Izzy, you said that you tend to trade ES futures more than NQ. So maybe we could start with you on ES futures. I've got the daily chart up here, but we can throw up any time frame you want. We could talk about whatever you want. So hit us with what you got.
Okay, you're just throwing me in there. Okay.
I'm throwing you in there.
Well, currently right now, I would say with ES, we're kind of we've been stuck, I would say, in, I guess you could call it a channel, right? Like it's been consolidating for a few days now. Right. I've got major flips that are supposed to happen tomorrow and Wednesday. So I've kind of expected us to stay in these ranges for the last 8 days or so, if that makes sense. So okay. I'm not really surprised to see this. Like if you've been checking my post, I've talked a lot about compression, and I mean, I'm not sure on, like Scott and I just met, but I've noticed that this recent trend rally was a lot more compressed than the last ones that we've had and not just a rally on the upside, even like on the reversals that we've had this year, right? So, and what I mean by compression is I don't think it's a full relief, right? And I think it's because it's being pinned down until December. So before year end. So I am expecting a lot of volatility to start coming in the next few weeks for sure.
Okay, you were talking about major levels. Can you kind of elaborate a bit on that?
Yeah, I was supposed to tweet that and I forgot. Okay, so okay. I kind of give my levels a weighting. So I usually will have my core level. So that's usually a spot that it'll trigger a big move in either direction. So it's actually funny because today one of my core levels is 3972, 397350. And I don't know if you've noticed, like we weren't able to break that intraday today, right? We kept getting stuck at my core. So it just kept getting pivoted right back down. And then I'll have major levels, which are usually just the points right below my core. So like 3968, 396550. And you can see today intraday, it tried hitting again, like both those ranges and reverse right back. So, and then I do like key levels, which I wouldn't call them insignificant, but they're kind of just like the levels that occur as it's trending, right? So like when it's trying to reach its major or core spot. So I definitely do it on weightings like that. So currently right now I've got 3936 as the core from the bottom. And if you notice today, when I shorted it today, we hit 3937.50, I think, right? So my thoughts were bottom range core support protected. Likely means we're going to see a rally back to the upper core, right? So 3972 intraday at some point, just because, again, I think we're going to stay in these tight ranges for a bit until we start seeing some bigger flips happen. So that's just kind of how it makes it easier for me. Then I have more conviction to go really heavy on my short or long or whatever the case is once those core spots trigger, if that makes sense.
Okay. Yeah, it totally makes sense. So 3973 is kind of your big line in the sand is what it's kind of sounding like to me.
Yeah. Like I've got like 3973, 50, 3978. That's kind of like the range that, and I'm like an open close trader. So for me, it's kind of like, it's not just about hitting that level. It has to clear and break above that level. So I look for key opening breaks, key closing breaks, right? So it's not just, oh, it traded at that level, so we're going to go up 80 points. No, it doesn't work like that, right? There's there's a lot more to it when you're executing in real time. So
time frame wise, go ahead, Scott, go ahead.
I think Izzy's talking about commitment, right? There's a difference between touching a level and a difference between having a commitment to the level. So when you get to one of these important, I call it, when you get to these important levels, you know, can you get above and stay above it, show commitment to it, so then shorts get scared and buyers come in. So that shows that the active buyers are in control. And if you get below a level like 39.35, if the sellers had control today, it would have got below, it would have stayed below. And then anyone looking to stay long, they start getting out and the shorts get more confident. So it's very important when you define levels, what do they do at those levels? Not just do they hit them, and you know, some things mean a lot more than others.
Yeah, I completely agree with that. I usually call it, just because you broke above doesn't mean you closed above, right? And just because you broke below doesn't mean that you closed below. Or if you breach below, then you have to kind of, like, I just have to like I track minute sticks. So like I keep track and tally every one of those minute formation sticks at my core spots, so I can keep track if they've closed above or below, or do you know what I mean? So it really, really helps. So exactly what Scott's saying.
Time frame wise, what are you looking for? Like what's a proper close above? What time frame do you need to see that?
I think that's where I kind of differ from most people. I use like up to, I don't even know, like 100 time frames a day.
Yeah.
So I'm a time trader. I time my trades. So I try timing the high a day, low a day. I'm not looking for just price. I'm kind of crazy. I kind of like looking for a specific price to hit by a specific time. And it has to trigger at that exact price at that exact time. So I'm like yeah. So when I do that, it's kind of like, that's why I said, I think people are going to start asking, like, can you ask for time strategies? But that's not happening. But multiple time frames, like so many time frames. But for me, it's more like on the minute formation, that's usually the time frame I'm using to see if it closed above or opened above, I guess, right? But on tracking time, it kind of varies and it changes every single day.
Got it.
So.
Very interesting. Do you have a view as far as like kind of a bigger time frame, maybe daily, weekly, kind of where your head's at? I know you said you're expecting a lot of volatility into year end. Are you anticipating continuation higher? Are you looking for new lows? Where's your head at?
I think we're so neutral right now that it could go both ways. And it could go both ways where we could actually see both scenarios play out. And I think that's the fun part, because I think that there's enough room that we could still see some upside and some downside, right? So it's going to be really relative to breaking out of the zone, right? So
the beauty of that, you know, is that like if right now, as he's saying, we're neutral, which we kind of are, right? You had to move from the lows of on a bigger time frame, October 13th, right? That was the 34.91. You could show that was, you know, and then we hit 4,028, which was the high on November 15th. So usually what you do get is digestion, right? Some
Yeah.
say things are digesting for higher prices, then some say they're stalling for lower prices. So both sides have an opinion on what's going to happen next. So it seems like a lot of technicians like us, we have different names for different levels and what those levels mean. Okay.
Yeah.
And if you look at the consolidation that we've been in since hitting the high of just say November 15th to even the 17th low, which was 3906, we're developing like a wedge type, bull flag or type pattern, which is great because what does it give you? It gives you points of reference to make decisions if they get above and stay above or get below and stay below, to give you what the next potential directional move is. So
Right.
you prepare of like, what we have right there, the wedge. I don't know why do you have those two lines in that wedge? What are those blue lines?
Oh, these were just Izzy's levels that she was looking at.
Okay, well, yeah, that's tight. I would say, like obviously depending on the time frame, you want to draw more lines too. Like you'd want to go up towards the 4028. That's the top of the triangle, so to speak, and then you have 3906 at the bottom. So everything within that triangle, is kind of noisy and choppy, and it's made to wear traders out before the greater market gods pick their direction. Now, Izzy, when you say flip, is that what you mean when it picks a direction? Because I don't trade S&P futures. I use them to trade the SPYs, the Qs, and then I use those to use relative strength and weakness to trade names. But I'm always looking at all the levels of the S&P. So is that what that means?
Yeah, I should have posted that document. So flip, I feel like I need to pull it up for myself so I can read it off. So it can mean numerous things. There's so many different things that I refer to. So obviously I'm looking at specific time frames for my flips, but it's not always just applicable to a time frame, if that makes sense. Like some of it for me is also almost like market intuition. Do you know what I mean? Like I can kind of glance at it and I would have like an idea and kind of like what Scott was saying. So those were just my levels for more so intraday today, but that 3906 is huge, right? So I kind of try marking things as like zones, right? So like I've got like my bull zone, my bear zone, my neutral zone. 3906 and lower, I would say, is a bear zone, and we kept protecting that, right? So 3898 would be, that's a definite entry back into that bear zone range, right? Where sustaining over 3913, 3913.50 is my entry to bull zone. And if you remember last week, we kind of held above that at 3912, right? So that keeps me in that bullish zone to 3972 is kind of where, so I kind of like breaking it down into increments, but a lot of it is, I'm going to read this out to you. I should have posted this PDF. Maybe I'll tweet it right now, just because they're called Izzy-isms.
Oh my goodness, I have Red Dog-isms. We're made for each other. You married? I'm married. No,
all right, so isms. we're talking about some of these levels on ES. What are you thinking, Scott? We've heard a bit from Miss Izzy here. Yeah. Where's your head at?
On your daily chart, go back to the daily chart for a second.
I'm there, man.
All right, so look at the high that was put in August 16th, right? That was what, 43.25?
This bad boy right up here.
Yep. And then you see the candle on August 19th. Okay, so basically you could draw a line below those three wicks, which was pretty much like a consolidation flag, where that was where you had Tom Lee saying, hey, we're going back to the highs because we were at 43.25, and you had all the bulls saying we're going back there, and then you had all the the bears saying, hey, this was a bear market bounce and it's over. And then the candle right there on August 19th closed below the August 17th low, which was 42.53, and broke the 8-day. Yeah. So that day was when that neutral zone went from neutral to negative, where I try and use sequences. There's like, when you're in a market that's moving, you have active bullish sequences and active bearish sequences. And you could draw a line, almost like an ascending channel that broke on that day when it went below 42.53. That's when the trend from June pretty much ended, right? So that was a key day and key inflection point day to switch gears. So, if you take us, and that was a huge bear market bounce. It knocked the teeth out of shorts during the entire bear market bounce. Everyone was calling a top, and Mike Wilson was saying we're going to make new lows. And all of a sudden, if you started shorting at 4,100 and you were a trader, you didn't make it to 43.25 until finally, that day, which was the important day, which is August 19th. So I think what we're looking for right now is that type of day to resolve. I don't say flip, I say like resolve, for the range. I'm a lot older. I'm 50. How old are you, Izzy?
33.
All right, so I got some older terms, and
I feel
I
old.
would say resolve. So, sometimes I have commitment issues, but we have to have a resolution to what you're committed to. So I love your level 39.79 or 39.78 because that's the high of November 18th. Okay.
Yeah.
So sometimes you want to cheat, right? We're talking about all these relationships. You want to cheat that when you get back to 4,028. If you want to cheat long because you don't want to wait till 4,028, you could start getting a little long if you see a commitment or a close above 39.79, because then you have your next real big point of reference is 4,028, and that's 40 handles higher. So that's like your get in because your intuition is telling you we're resolving this range higher, and then the next point of reference is 4,028, and then you have that gap up to 4,083. So on the flip side, if you want to you want to have commitment to the bearish side, then you have today's low, which was 39.33. So if we get below that in the next day or so, you could start cheating short, whatever that is to you, whether you're trading stocks, whether you're buying puts, whatever. So you're basically cheating that you're saying, hey, we're now below 39.33. Maybe we could stay below. Maybe there's commitment to it. And then your next level is 39.06. And then if we're really that weak and we break 39.06 and we get below it, you then caught a little bit of inside action before the range resolves because you're cheating. And then all of a sudden the next level below is, November 10th, you have the 38.66 price gap from the CPI. So some traders cheat and then you can get a little chopped up. But if you all of a sudden know your levels and see things early, then it gives you the conviction and you're early to that resolution of whatever that range is. And and then you really make a lot of money versus just, making a little micro scalps.
Right. So real quick, before we go to NQ here, gut instinct, higher or lower from here, you think? Which one comes first? Both of you.
Listen, I'll tell you this. If we're going to break above 39.79, I think it has to happen between Wednesday and Friday. If we don't break above that in this historical time period, I think, boom, I think next week's going to be a really negative week. I'm going to break below 39.06 because then we have nothing until, the CPI and the Fed a week later. So I know for me and my traders, we're kind of cheating. We're trying to stay long a little bit because we think, we still could resolve higher. We still could see maybe 4,100 or 4,083. But meanwhile, today, to me, the price action looked kind of horrendous. Yet, Tesla at new lows. You had, these pocket pivots and like a Google breaking below it, or an Amazon being heavy, or a Meta doing nothing, or the semis a little. So it's like, to me, my gut is kind of telling me it feels like we're going lower, but it also felt like we were going lower. And then we had the weaker than expected CPI, and then they trapped everybody. So I'm trying to be a little neutral. I'm trying to use some options so I could basically know what my risk is when I'm trying to figure out what the directional move is, and then I'll wait for it. So to me, what I did is, if you want to go to the SPYs, I'll tell you what kind of like my thought process is.
Yeah.
Before going to the Qs, because
there we go.
A lot of my guys also trade the SPYs and the Qs because we're so involved from the whole day that it's hard to trade futures all night and get up even that early. So so I think if Izzy's level, what was it, 39.78? So that's kind of like the same thing with the SPY pivot here. The 397.81 is the high from Friday. So if you want to draw a little wedge there, you have a wedge in the spiders also. You could draw the wedge from the low of November 10th all the way into the apex, and we're forming like a little apex right now in the SPYs. I would take it. Yeah, I would go to the top one, to the top of that. So today was like an inside day. We held Friday's low, and we have a shortened week. It's getting tight. Same thing. If all of a sudden we start breaking below 393, which is today's low, if you want to cheat short because you think if we break and stay and show commitment below 393, we're going to get 390, which was the low from the 17th. Then you're catching a little bit of a middle. But some people did that today and they got caught, right? Went a little bit below Friday's low. We went to what was it, 32.66. We went below it by
just
by
a
like
few
45
points.
cents, but we didn't stay below. So it didn't stay.
Right.
So you got a little chopped up. Sometimes you have to spend a little bit of money before you get the bigger, better trade. So again, 393 to me is kind of like pivot support. And then I don't know what that other term was. The real important support is 390.
Yeah.
And then you break and close below 390, and then you get resolution to the downside.
Right.
And then on the flip side, we get above 397.81 and close above it. Then I go from neutral to positive, and then I probably put on 6, 7, 8 positions, and I lean long, thinking now the shorts are on the run, and we could at least get to 402.31, which is the high of the range from November 15th. And then you have that the volume, the gap, and you guys call it what's that when you have no volume in there? The vacuum, Jason?
Yeah, essentially. Yeah.
So at least there's all these parameters. And so for me, my intuition said is if we're going to break higher, I bought the $400 calls for Wednesday and Friday. And if we start going, I could add to them and turn them into a call spread. And then I also bought some 385 puts for not this Wednesday or Friday, but for the following Friday, which I believe is like December 2nd, because I feel like if we don't break to the upside of this wedge this week, anyone who is trying to cheat for that is going to get out, and then you have nothing that week, and then we could perhaps get down to that November 10th gap from the CPI, or maybe even lower.
Got it. Izzy, what do you think?
So I mean, I can share some of my like higher ranges.
Yeah.
Right? So not just like 39, 72, and 79 is like that's more like within this core, but like the spots that I had above that were I had 40-10. And if you remember the one session when we first started testing over 4K, a 4K to me means nothing. So I have 399,750. And if you remember future session, like maybe a week and a half back, that's where it stalled, right? So it stalled at 399,750 to the penny, I think in that late session, and then it reversed back. So for me, it was a break of 399,750 takes us to 40-10. And then if you remember, we stalled at 4009.75, right? So again, it kind of stopped at my wall, came back down. I have like the same sort of idea with my 3,900 ranges. I have like my neutral zone, my bear zone, and my bull zone, right? So on the bull side, I had 40.51. I think we hit 40.50.75, right? So anything above that was a bull zone. I had 40.38. And that was the day that if you remember, we channeled between 40.10 to 40.38. I think that was the day of CPI, if I remember correctly.
PPI, actually,
and then we came all the way back down, right? So back to the bear zone, right? So it was kind of like, it kind of rinses and repeats, but right now it's really between that gap zone. And I mean, I normally don't always share exactly what I'm using, but these are April gaps from 2021. And actually something that's really cool if you're talking about SPY, right? Like you can pull it up. So I've got on ES, it's that 40-10, 40-15, 40-21, 40-30, right? 40-38, 40-51. Those are kind of the upper zones. We need to break those for us to even try getting anywhere near 4,100, right? So I've got 4085, right? 4138, 4140. Those are kind of the targets that I am aiming for, but we need to, so the reason why I say it's neutral is because we've touched both sides, right? It's kind of like the market's kind of just like pulling here, right? So if you pull up SPY, go all the way back to April of 2021.
Okay. Let's see.
So I have like the thing where, just because you forget doesn't mean the market forgot, right? And I always say it's like one of those conversations you don't want to have, and the market ends up having it with you like later down the road. So once you touch these zones, they do end up retouching at some point in the future. It works on both sides, right? So
where in April are we talking?
Right where your line is, right there.
Okay, so it's at this gap.
Yeah, put a retracement in there. Just put the 61.8, nothing else. On ES, it's easier because on ES, you can actually visually see them, right? But because of obviously more price history with it trading more hours. But so just put it just literally in between the gap.
Oh,
that little tiny gap.
Oh, like this?
That's it. Nothing else. Yeah.
Oh, okay.
And
hold on.
Go back. So you want that 61.8. Don't include wicks, only the gap.
Are you on the weekly right now?
This is the daily.
Daily.
So it just to give you an idea of like where the market kind of is, this is, I think, the easiest way for new traders to look at it, right? Because these gaps, they always end up getting filled but it kind of stalled there. So that gap range that I have is 402.32, right? We hit 402.31. So that's where I'll use that Izzyism. It's like, that's to the penny, right? So like, you're not going to break above that. You're not going to go any higher unless we get that nice clean break, right? So
Right.
that's kind of what I'm watching here. So it's like for me on ES, it was off by 0.25, and on SPY it was off by a penny. Those are, it's so close, but it just couldn't quite make it, right? So it's like it was so close to getting there and getting that nice big break. But that's where I go back and say this entire rally has been compressed, right? That we should have rallied from post October 13th. We should have, that second day continuation, it should have kept going. That was the first sign. That's what I told my group. I'm like, that's a compression. A real rally does not stall like that. It should have had the full break. And that's kind of what we've seen happen, right? It's kind of just been like slowly, gradually inclining, but it's still being kind of like tightened. And I think what Scott was saying too, like I 100% agree with that, right? I feel like if we don't make or break this week, right, then that would probably be some bad news heading into December, right? Like I do have major flips coming up for this week, the 22nd and 23rd. And then from there, it's December 9th, I think I had, or something like that.
And
then
these are
we've
your,
got the,
these are your like time-based. This is
yeah, like on
time-based.
certain time frames where I'm expecting certain things to break. But I think like to answer what Scott was asking earlier, like there's flip can mean like several things, right? So like how he refers to it as like commitment, right? And like having that price level commit to that on that certain, you know, whether it's a time frame that he's using. Like for me, it's kind of like it's a flip off, you know, either bottom or support ranges, right? Price exhaustion, like is it like there's I kind of refer to it for like multiple things, right? Volatility periods, like are we entering kind of a range of volatility? Duration, like how long is this trade going to actually last, right? Confirmation for continuation. I think that's probably one of the biggest things. So this flip right now that I have, it's my confirmation for continuation. Do you know what I mean? So I reference flips for different scenarios. It's not just right where I'll have a flip for like, oh, this is when I'm expecting price to exhaust sort of thing, right? Or a flip for us to go long off lows. And so it's kind of like, or a flip where I'm expecting that specific price to hit at a specific time or whatever the case is. But or a flip for channeling. So right now we're in my channeling flip. So I told the group last week, we just flipped. If this doesn't break this range by, I think we were using, I think my last big flip was actually November 10th and 9th, right? And I think that's when we had the most price action since, right? So I was expecting a lot of PA on the 10th. And I said, if we don't break that week, we're going to get stuck in a channeling flip until the 22nd and 23rd. So far that's been right. We haven't broken. Right. Yeah. So I've got like, so now I've got my 23rd is the confirmation for continuation flip. So we'll see if we actually get that nice break.
Interesting.
Yeah.
So the 23rd, the 23rd happens to be Wednesday, right before we're off for Thanksgiving into the half day Friday. So that would historically, that would be a strong day if that's a timing mechanism flip. So then you combine that with the potential of having, you know, the constricted price, which is what we are getting right now in the S&P and the SPYs and the Qs, which are a little weaker. But so I would, you know, so sometimes it pays to know when that, you know, the timing cycles there too, which some people call it. So on Wednesday, if we were to get and close above 397.81 or 398, you know, I would always say like the good book, the high probability play would be testing, you know, the 400 to 402.31 and that area, which, you know, was exhausted because again, from the move that we had this time, we're coming from a higher level that maybe, what was this thing you said when, you know, the scene of the crime, it goes back there and it has to fill it. Like the gap was not filled from September 12th. That's a lot of people looking between 403 and 408.46, you know, for that to have to get filled. But gaps, to me, gaps don't have to get filled. You know, it'd be too easy to make money if that's always the case.
Right.
Gaps.
Yeah, I don't think gaps have to get filled either. Like, I don't think.
Yeah, it's like sometimes if a gap doesn't get filled, it almost gives you more data sometimes because it's showing you how strong that gap is and helps you with the direction of what's happening next. Like right now, the gap from the CPI, which is November 10th, right? That gap, that was really strong. If you go to that candle, you know, that's what ignited this last thing. Right now, that's in control. If they can't press us below 390 to that gap and we get above 398, that's showing you that that gap is in control and it's still predicting price. You know, if we broke below 390 and that gap doesn't hold, then it negates it and then it means nothing, you know. But anyway, everything means something depending on if you're on the right side of the market making money or going against it. But
well, you know, what's interesting too regarding the time-based piece of your analysis, Izzy, Wednesday, we have FOMC minutes, we have durable goods orders, we have jobless claims, we have PMI composite flash, we have new home sales and consumer sentiment data all coming out on Wednesday, low liquidity day. I mean, it would make sense, right? If
Yes,
something
Yeah, I
were to
love when
happen.
macros align. When macros align with time and price, it's the best thing ever. And they almost always do. I feel like price always precedes,
the narrative.
news, right? So like, I feel like that's always the case. So
Right. Well, all right.
They
So you
always
guys,
make a narrative around the price.
we have spent 30 minutes talking about ES. So I want to like jam through a couple, like, let's talk about the Qs real quick and kind of see where we are in the Qs. And then let's get into some of these individual names, because I want to get through more than just a couple indices here. Scott, we'll start with you. What are you thinking about the Qs? I'm going to throw back up your moving averages here just so that we can see them all.
Well, the Qs showed relative weakness today, right? Because the Qs went below Friday's low and actually closed below it, right?
too.
The SPYs
Yep.
can do that.
Yep.
So typically that hasn't been, a full-fledged problem for the overall broad industry, because you have some strength in, in the energy names and in the financials and this stuff. But I don't like when the market's led by that. It just doesn't really interest me as much. So the question is like is tech going to be that weak that it turns into such a headwind where it weighs on the SPYs, and is this showing us that the SPYs are going to break the wedge to the downside because the Qs are already cheating that way? So it's cheating, it's not showing potency. So you can't put too much evidence that just because the Qs were a little weaker than the SPYs, that all of a sudden you could be so short overnight, So,
Right.
but this gives you a little bit of, if you were neutral to positive today, coming in thinking that on Wednesday, the 23rd, we're going to break above it. Today's action in tech kind of says, be just a little bit more careful and wait for more evidence. So now what you really have is you have 280.72, which is the low from last week. If we were to get and stay below that, I think, people would notice a little bit more, and maybe they would de-risk a little bit more. And then the gap from the 10th is 273.85. So I'm watching, 280.72, which is the low from the 17th, as a much more important level than a little clue that that tech was weaker, and then the flip side is that, hey, look at that, the market held up good. It didn't really care that Tesla's at a new low in the year, that Amazon is a stone throw away from the low of the year, that Apple closed below Friday's low. So it's like, what's gonna overpower what? So that's why I think, again, what Izzy said, it's a good day to be kind of neutral, because we need a little bit more evidence on where to cheat, because you're not getting a definite confirmation on which way we are going, especially with all the the things that work with the timing mechanisms.
Got it. Izzy, what are you thinking?
for the Qs in general?
Yeah. Just in general.
Yeah, I feel like, Apple's definitely shown like some strength like in the last like recent rally, right? But I definitely use TrendSpider has a great, and I'm not even like trying to market this. You have a great volatility indicator that I love. I don't use any indicators on my charts, just price. But if I ever do use one, it's usually that volatility stop indicator. And something I noticed recently was Apple was kind of behind, right? So it was a little bit lagging in terms of retracing the volatility stop, whereas ES and SPY was ahead. So I've been trying to use that. Like I try measuring volatility quite a bit just to kind of give me an idea of, bigger, large cap and mega cap names that could obviously lead the market. Like I think a lot of this rally was definitely not run by tech, right? So not by the Qs. This was like, for me personally, I was like super long on energy, right? So you always hear me talk about XOM. Financials were doing really good, right? So there was Bank of America that really did well, right? Goldman Sachs did well. We had some other ones on like maybe more low volatility tech like IBM, Oracle, right? Those ones outperformed in comparison to some of the other ones. But I find that this recent rally, maybe more on the semis, right, than the traditional, obviously, mega cap tech, because you were seeing a lot of weakness, and specifically not in QQQ specifically, but in XLC, right, with obviously Google and Amazon and whatnot. But if we're going to rally, these are definitely the last sectors that have to get moving, and they have to kind of get moving now. Do you know what I mean? So the rest kind of held up the market, right? So that's what I was trying to explain to people when they were like, well, Apple is down and everything else, and Microsoft is down and Google's down, so why isn't the market crashing? I'm like, well, because everything else is like holding the ship, right? So, and it wasn't just like one specific sector. You had numerous sectors that were holding up the market, right? So amongst various things, right? Industrials, those outperform like really well, right? Today you're seeing a lot in material names, right? So you're talking a little bit about durable goods this Wednesday. I'm already seeing some strength in industrials and some material names today, specifically steel, some copper, right? There was actually, I do note things, even if they're only strong off the open, but Bank of America did sustain today, whereas you're seeing energy kind of it was quite, I would say, bearish off the opening range until we had that nice relief. But you have to also watch for OPEC. So I know that we don't have our Fed decision until mid-December, but I think that there's some other important catalysts that are coming up that will dictate the price and overall direction of the market, right? Outside of tech, right? So I think tech is going to be a huge portion of it, but we really need to start watching energy at these levels, right? And I think specifically because a lot of the energy names were trading a lot higher than the actual underlying commodity, right? So like you saw the range with XOM versus like CL, like they weren't even anywhere close.
You could say, I think, Izzy, you could kind of say like the XLE, some bears in the XLE are trying to point to a little bit of a false breakout with the double top-ish. So I think that 93.30.
We're in a really tough spot with oil for sure.
You punch up the XLE, kind of pushed above 93.30, got people really bullish, and then couldn't hold it, and then boom, it kind of fell fast.
Right.
So, and now I think it's not a big deal, but I think if energy doesn't hold here, okay, which if the XLE doesn't like hold today's low, and all of a sudden, the Qs can't play a little upside catch up and become more of a headwind, it's going to be very hard for the S&P to break above, the 4,000 or 3980 area. So you need energy to hold here. You need the banks to hold where they held today, and then you need tech to not at least be a headwind. You need them just to participate a little bit. You can't have Tesla making lower lows on the year, and you think that all of a sudden the S&P is going to be performing well besides just hanging in. So if we're going to want this market to have any power, you need the leaders who have been leading, and then you need some of the weaker groups to play some catch up. Otherwise, the whole formula doesn't come together, and then you just have to be specific, which is what most of this year has been. It's just specific trades in specific sectors using specific levels, using active sequences. And right now, we just. Sorry.
Go ahead. No, go ahead.
So I'm saying, so right now we just had a very strong active sequence in the S&P cash and the SPYs, and now the big debate in the S&P cash, if you go back, are we going to see 4,100 before we make new lows in the first and second quarter of 2013? I think, would you guys agree the consensus right now, and I hate the consensus, is that with the technicals and the seasonals and, with the Fed slowing down the rates of increase and some of the data showing us in numbers, that maybe there's a way for us to clear, in the SPYs or the S&P cash 4,028 and go to 4,100. But once we get to 4,100, chances are, first quarter, we're going to see new lows because of the earnings recession we're going to have. So I kind of feel like that scares me a little bit, because that's what I feel like too many people are saying. So that's why I'm saying, if we don't all of a sudden get above this compression higher this week, anyone who thought maybe that could happen is like, oh, it's not going to happen, because nobody really even wants it to happen. People kind of in their head are like, I really don't want to be long because I feel like we're going lower, but I have to perform with the market and I have to be involved for people around me. So that's why I think this week is really important, because if we don't start to go, then we could roll over, and then this changes real fast when you could even draw an ascending channel to the low from the low from October up into the high. And if that channel breaks the same way the channel broke on August 19th, for that one, all of a sudden it went from that 4,300 all the way to new lows.
Right.
So we're coming to that inflection point that you have to be really careful on. So,
one thing you talked about was in the Qs need to participate to some degree, right? We need to see banks, we need to see industrials, and then we need to see Qs at least participate. They can't be a headwind. They can't bring things down. So in order for the Qs to participate, you need some of the biggest names in the Qs to start doing something favorable. So let's talk about some of those big names real quick. Let's talk about Apple. Let's talk about Tesla. And then Scott, you mentioned you wanted to go over Taiwan Semiconductor. So let's take like a couple minutes on each of those and kind of see how we feel about these three names. Yeah.
Yeah. So can I start with Apple? Apple,
Yeah.
I think Izzy did a great job with it. It's outperformed a lot of the year. It didn't make new lows like it made in June, but it's not like it's been running away and it's been super duper special. But we need something in tech to help lead. So right now, if you look today's bar in Apple, we went below really fast. It happened too. Like we went below Friday's low like that today. Like,
yeah.
ooh, and stayed below. But again, we're still kind of in the range where you could draw a line at the November 17th low, and we're still above that. So there's still a chance that we could hold that spot like this, and then take out, if you draw a line from just say the high of 157, the October 28th high down. So that could be, a bigger, wedge. There you go. So in order for tech to act any better into year end, you're going to need pretty much Apple to hold the November 17th low, and you're going to need it to start getting above that 152.5.
Right.
Otherwise, I don't even, besides like value tech like IBM, which is true, it's acting well, Cisco's acting well,
right.
But that's not going to lead the Qs and lead sentiment, into a move to 4,100 or above.
Right.
You need Apple and you need Tesla to stop going down.
Yeah. Izzy, what do you think on Apple?
So Apple has definitely been one that I think in general has been pretty fun to play, specifically with earnings, but it's really similar to ES. I don't really see too much of a difference in terms of that, right? So for Apple, I've got 14747, 14754. Those are some of my core spots. It's definitely respected them more so in the last few sessions, right? And then I've got kind of some upper range here. I need to just zoom in a bit.
Jason, move it over a little bit to your left, so they'll be able to see it a little bit. Yeah, there you go.
So on the upper range, I had 152.26 and 151.92. So you can kind of see we're still kind of stuck in those ranges, right? So
right.
It's quite similar, right? Like I feel like Apple is still relatively safe. You notice how today it was really respecting these, both ES and Apple were respecting those like core ranges, right? Whereas the last time we tested them recently this week, that we saw that, drop down on Thursday.
Right here.
And then it kind of respected around that 146 range, whatever it was, like 146.15 or something like that. But it's really similar. Like I think it's in the same boat as the index. Like even though the index is a little bit ahead of Apple, it's not too far ahead. It's only ahead by like maybe 1 or 2 sessions.
Okay, cool. What about Tesla?
Usually the indices do better when Apple's ahead of the indices. So
well, typically if the other sectors weren't holding the ship, right? So I think because we saw so much strength in some major healthcare names like Pfizer, Johnson & Johnson. We had some strength in XOM. We had strength in the banks, right? Like I think that majority is what held up the index more so than Apple. Like I feel like the move was compressed because Apple didn't participate, if that makes sense.
Interesting. Yeah.
You know what I mean? So that's where the compression actually came into play. But Tesla today is perfect. So I'm actually so excited to share Tesla because that one was like perfect price action today on that one. My spot on Tesla, I guess you could call it the core spot is 167.50. And we almost triggered it today. That's like a death spot for Tesla. So I am using a 2-month range on this one. So you could definitely use a 2-month chart on Tesla, I think, if you want to just very basic price ranges for a wider frame. I had 235.22 on the upside. And I did do a live trade on Tesla a few weeks back where we traded it up to 235. That was really fun. But that's kind of where it kept getting stuck, right? So like same sort of idea there. There was no real, close above that range, right? I had 235.22.
Jason, if you go to the daily on that, you'll see that pivot. If you go to the daily, I think she's talking about November 1st when they tried to push above that
right
and
here.
failed. That's what I call a red dog reversal, where that started the active sequence again to the downside. You could draw a line across the 230 area and move that to the left now. The line to the left. So it kind of pushed above and then couldn't hold it above. So like we talked about commitment, there was no commitment to it. And then that started the next sequence lower, the continuation of what was already going on.
Yeah.
Right.
And then, then draw, if you go back to make an ascending channel, look at another topping tail on what's it called, on November 15th. That was another time it did a false move where it couldn't get above a level and failed, which was on
right here.
November 15th.
Yeah.
And there's another similar, and then you have that triangle there, and then it just broke to the downside. So,
right.
And it was the most feeble bounce out of all of them,
Right.
So now let me ask you a question, Izzy. So you're saying 167.50, is that a target to the downside where you think it's exhausted, or you think that's where it accelerates?
That's where it could accelerate if it's taken out. So I think if it gets taken out, obviously it can breach and then still come back over, right? Like it's a very tough zone, kind of like AMD. AMZ hit those danger zones, but it was like slightly hitting below them and then like holding back up. It's almost like they're drowning, but then like catching their air again. But so like they're still trying to stay above water, but that's definitely a death spot, I think, for Tesla if it doesn't hold here, right? So I've got low ranges as low as 129, 131 if we can't sustain that 167 spot. I'm sure you could round off maybe like 160. Do you know what I mean? Like just
go to the weekly on that, Jason. You'll see what we were talking about with that 149, and it's very easy to see there. If you go to the weekly, and yeah, exactly. That's the prominent. So right there, you're saying that's like it filled one void, and there's another void into that congestion, which is 123 to 149. That's one spot right there. Yeah, that's a good spot right there, which probably after 5 down days, you probably bounce a little bit off that.
And they never took it out today, right? So it held above, it closed above. So that's why I'm saying like, you don't just short it because it's getting near it. That's not how it works, right? Like we're shorting it to the level. So.
And day 5, you don't short anything.
No,
that's not necessarily true.
For half a second,
true.
maybe.
Sometimes you can get 7.
You can, but okay. But you're playing with fire, more times than not.
You could use the back tester, and you could back test and see after 5 red days on Tesla what usually happens.
Normally you do hit exhaustion after 4 or 5 sessions. That's very true. So
I'll test it. I'll test it later on tonight once we're off this show, and I'll send you guys the results and see. I'm kind of curious now. I want to know. Okay, so Tesla's at a make or break spot, and we know that if Tesla bounces here and reverses, and even if it gains $10-15, that could be a serious check in the bullish column for the Qs, which is we kind of need to see the Qs follow through to make this whole thing work.
Put the 8-day in there, you'll see that how even in a bear trend how it comes up and tests it. So it's if it just wants to go back up and kiss it, you're talking about 1.8. You're talking about
$20,
right? And that'll help the spies and the Qs, and that'll help this, the turkey rally. If that's what we're going to get to keep everybody happy and eating.
Right. All right. So we've talked about some of the big names. Now you guys had a couple names that you wanted to discuss specifically. Izzy, yours was AEP, right?
Yes, it's so now it seems funny because I was looking with my group last night. I'm like, man, which one am I going to talk about? But now it looks like I almost screened the top gainer on the market or something. But it did really well today, considering like overall market weakness. So moving on to some other sectors that I think could also help the market aside from the Qs, right? So like we want to see obviously financials and energy sustain. But we also want to see the Qs participate, and then maybe some other ones, right? So like I think industrials, materials, and then some other inverse sectors like maybe like healthcare, like those ones have helped a little bit. But now I want to start seeing some strength in utilities too, right? So, and I mean technically 'tis the season. I think the easiest way to look at utilities right now, if I'm being honest, like for XLU, is doing something as simple as taking a retracement from that high to that low, using that 50% mark, I'm just waiting for it to clear it, right? So
I actually had that, I think, drawn on my chart, and
yeah, I just feel like
looking.
it's so much easier like that. Especially like
Right
I
there.
don't really draw my levels with gaps and fibs and stuff like that. But I feel like for, you know, new traders entering the market, it is easier. Do you know what I mean? Like, no, we don't always fill the gaps. No, we don't always hit those exact retracements, but it kind of gives you a good idea to work with the range that you're given, right? So right now on XLU, I think this is a perfect way of looking at it. We're basically, again, it's just like the Qs. We're right at that wall. It's like we're trying so hard to climb over and we just can't make it, right? So
Right.
AEP was the one that I felt would have some good strength. I
Okay.
was looking for a nice break today over 91.28. I got it.
Got it. Yep.
And then my target was 93.13. I actually exceeded that. And then this is where I go for a break above, close above. So it broke above this morning and it closed above. So this is perfect, right? Going into remainder of the week. I got my open above and my close above. So
when you say
both
break above,
ranges,
close above, do you mean previous high?
opening, closing ranges. So like where it actually had opened. So if I had 91.28 as the range I wanted to open above, I wanted to close above 93.13.
Got it.
And
Okay.
it did. So that was kind of the range that I was looking for. I think generally speaking, there's you know, a lot of upside room for a lot of these utility names, but it's definitely been beaten down, right? Like, so we did do utilities long over the summer months, and then that became a short sector like second week of September, right? I used to work in the power and gas industries, like that was my background before. So you see a lot of the seasonality trends in a lot of these names, but I don't know what it is about utilities this year. I feel
Izzy,
like,
can I add something to this for you?
yeah, of course.
A little bit. Put the 200-day in, Jason, please.
Sure thing. Boom. Whoo. To the penny.
They always align like that.
I'm just saying, like, if it hangs here for a day and then blasts through it, it's the first time it'll be over the 200-day in a while, which will help your bullish thesis. But it just
so I kind of use moving averages as a way to kind of like confirm the algos triggering my price points, right? Usually like those bigger ranges, like the 200.
That's a spot probably it should pause, and I wouldn't get worried if it paused there because of, you know, what's there. But then if it doesn't pull in too much, and then the next trade blasts through there, boom, you're gonna, you know, then it has room to the upside. I would say then it has room to almost like 97.50 even.
Yeah, there's a lot of upside room for utilities, which is what makes them nice. But this, I don't know what it is about this season. It just kind of seems a little off, right? Like not as strong, usually entering this late in November for power and gas, but it's in a really good spot right here. So definitely worth watching, I think.
Yeah, this is going to be a key. This is going to be a rubber match. You got a rubber match going on. You had 80 to 93. This is where the bears need to step up. If they can't reject price here, you know, it seems like you're going to get like 97 in the next 2-3 weeks.
Right. Interesting. Cool. And Scott, you wanted to talk about TSM. We got about 5 minutes left. Oh, and anybody who wants to try and win 3 months of TrendSpider, get your names in. So we're going to be drawing here in a few minutes, just so everybody knows. Okay, so TSM. Let's talk about TSM.
I'm going to be very fast because again, I like points of reference, and you know, you had that big gap up on the Buffett news on November 15th, and right now you're consolidating over that gap. So if you want to draw a line, you know, below the lows of November 16th and 17th, which is right around 78-ish. Move that over if you can. So you see there's like okay, now move the line over to the left a little bit. And then there's a big gap there. It's almost like sometimes I have a really cool play when you have like a pro earnings gap after earnings. You get a earnings play. It's powerful. You get a pro earnings gap. You get a gap pivot, and at least that's your point of reference, and you could be long versus that. So if I'm thinking, you know, with using the timing mechanism of the 23rd, we get a flip to the upside in the S&P. We're going to need a little help from the Qs and the semis. That this is one of the stronger semis that Buffett's now behind, and the sentiment is there that they are, you know, building a plant. Where was that plant that they announced that they?
I think it's in like Texas or something. It's somewhere in the States.
Exactly. So it's going to help maybe Apple somewhat with their chips and not as reliant on China. So it has all this, the story behind it where I know it's had a move, but I feel like let these moving averages kind of catch up, which they are. Like if you put the 8-day in, it's starting to like come up a little bit. So it might need another day or so. But like I know I'm long it versus 78-ish. And if it could go sideways and then, you know, start to look a little bit better, you could draw a line above the high of November 17th, which is like 82.93. You have yourself a bit of like, you know, then you could move that over a little bit to the left. You have a pocket pivot. So I'm watching that closely. If it holds that gap and turns up, and then all of a sudden NVIDIA acts a little bit better and AMD acts a little bit better, then maybe the Qs could act a little bit better. And then it helps the SPYs. And then all of a sudden you put it all together, and then you get S&P 4100. If this starts to fill that gap and AMD isn't special, NVIDIA does blah, and Apple doesn't start to perk up, then again, I feel like it's gonna be hard to, you know, do much to the upside besides a very choppiness. So I think that this is a good thing to watch. It's almost, well, probably just as good as watching AMD and NVIDIA. This should be on the radar to watch.
Yeah. Izzy, what do you think real quick?
On TSM specifically?
Yeah.
Let's take a look. Similar ranges in terms of like timing. Definitely been stuck in some inside ranges since the 16th. Its flip is also the 22nd. So I think if we're going to see some nice big, you know, upside potential on this thing, we would start seeing it pretty soon. And it's the same for AMD, you know, NVIDIA, those other semi names, but I'd probably watch for price levels in specific. I've got 82.76.
Okay. Yep.
And I've got above that on a clear break. So you see how it never closed above, never broke above 82.76. It's kind of the same thing. Yep. If we get a nice clear break over that, you definitely would want it to clear 84.52.
Okay.
85 even. And then I think if we can get a nice leg over 86.92, it should be off to 90.54, 90.72.
Got it. So okay, cool. And it's kind of the same ideas as Scott. Yeah, go.
Because so the high on November 17th is 82.93. Why isn't that as important as the level that you just mentioned above it? Because isn't that the most recent high point of reference that, you know, in order to get to 84 or 85 or 86, the first thing it has to do is get above and stay above 82.94, which is the high from November 17th, in order to show that it's even going in that direction. Do you put any emphasis or any weight on that, or that's
on like the stick that took out the spot that I'm looking at? So that would be my single stick, right? So that's the stick that took out my 82.76, right? So I definitely reference, so like when I say I track those minute sticks, that means I'm tracking the levels that took it out. So if it took it out on that minute stick, I'm going to track 80. I just want to see it clear 80. So for me, it's kind of like I use specific patterns and ranges, right? So it doesn't necessarily have to open above that prior high. It needs to clear that 82.76 spot, whatever it was. But I would love to see it take out those, you know, 82.88, 82.93 in a single stick when it does clear it, right? So it's kind of like, that's what I meant when I said my single sticks that I look for. It's like, it broke that level 82.76. That would have been my target on that day on TSM kind of thing, right? So, and because it did break it, I need to track that, right? And I need to track exactly what price it broke it at on that minute stick that day. So yeah, I would definitely incorporate it, but I don't need it to technically open above that high, if that makes sense.
Right. Just has to trade through and hold it and show commitment to it.
Yeah, basically.
And close above it. If it closes above it, it's good.
Yeah, yeah, exactly.
Right on. Well, Scott, Miss Izzy, you guys have been so much fun. This has been a cool way of doing this. I've really enjoyed getting to like talk back and forth with you both and pick your brains.
I'm gonna use the word cheating now when I'm gonna add that. I'm gonna steal that ism.
Be careful, Izzy.
Real quick for everybody watching who's not familiar with you guys, where can everybody find you? Scott first, then Izzy.
All right, I'm the Chief Strategic Officer at T3Live.com. I write a morning note. I have a group called the Alpha Team, where we have about 500-600 traders that trade real time all day. They get to see my positions live and interact. They could speak, and I'm on a microphone with 3 or 4 guys from 9 o'clock till about 11:30, and then I usually take a break, go to the gym because I was up since 4:45. So I just do two things. I write the note, it goes out at 8:30. I do a morning call video. I do that. Those are my premium products. And then I also try and, just add value to the greater good. I run a video every morning at 6:30. I call it the 6:30 Club, where I for 20 minutes, I just talk about what's happening. I play a little music. We have a little fun. I just talk about my process because I've been doing this for 22 years. So in order to do that for 22 years, you have to have a process where, that's why I don't trade futures all night. If I'm up at 4:45, I can't be up till 2 a.m. or at 3 o'clock when Izzy says all the action happens. So I got to be careful, So I'll miss a little.
.com trader.
I'll miss a little to keep myself sane. And and tomorrow I'm actually hosting a happy hour. Izzy, if you want to come, you could hang out, and it's
that'd be fun.
4:30 to probably 6. You can come, Jason, too. Where it's gonna open up to my Redler All Access to the Alpha team. I'm gonna do a small lesson, just the anatomy of 2022 and what I'm thinking about for 2023, and then just try and have some beverages. And it's pre-Thanksgiving, right? Hopefully everyone has a turkey out of the freezer. It's defrosting, because you better get that going. Otherwise, it's gonna be hard to do everything you got to do to get it marinated for Thursday.
Izzy, where can everybody find you?
Honestly, I'm like trying to hide, so people can't really find me. I don't know. I'm private right now. I mean, I'm trying to get to my request. I stopped mentoring in 2022. I just needed a break. Yeah. I just have like my small group. I did open up recently, like my public Discord side again, in like literally 3 weeks ago. It's been closed for like 2.5 years, but yeah, maybe 2023. Right. I do have my website, missizzytrades.com, but everything is kind of closed off right now. I kind of laugh at that. Like I always say that there's like the .com, there's like the .com bubble traders. There's the recession traders. I'm a 2008 recession trader. And then there's the COVID traders, right? So it's like, there's like all these different groups of traders that kind of enter the market at these funny times. So
yeah,
I always find it fun.
I'm impressed with the broad-based market knowledge, So I'm sure
I had a lot of fun. I really
you
enjoyed your analysis.
If you put yourself out there. So I guess it's what you can't get what you want, so that's a good thing.
You can't get what you want. Exactly. That's the whole idea, right? People always want what they can't have. So
there you go.
Well, again, Scott and Miss Izzy, thank you guys so much for being with us. If you tuned in today, I hope that you enjoyed the show. Again, we are offering 60% off, up to 60% off for our plans right now for our Black Friday sale. So if you are not yet a TrendSpider user, but you are interested in becoming one, now is the time. The sale is going to be good for only a couple more days. And like we said at the beginning of the show, we do have a winner. Drum roll for our winner. Our winner for the 3 months free is a man by the name of Daniel Ambron. Daniel Ambron, if you are still in the house, hit us up. Let us know. We need to know very, very soon, like instantaneously. Write us in the chat. Let us know you're here, and we'll get that account sorted out for you. If you do not, hit us up very soon, like within the next 30 seconds. We are going to pick a new winner. So hurry up, Daniel. Let us know. Scott, it seems like you wanted to say something.
I just want to say one more thing, like, not to throw something, TrendSpider away, but I've been using TrendSpider now for 1.5 years. I've used other charting platforms, and, I never had such a good interaction and relationship with a synergistic group that wants to do what's best for the technical analysis greater good. I've been using the charts for 1 year now. They don't go down. At first, I had red dog isms that I need, and I had my assistants call, and they put things in there that I needed. So you can get the support you need if it's, if you have a certain look and this and that for it. And I've had a great experience with TrendSpider, not only the product, but, all the people who really are committed to making sure that you guys could try and make a living at this, because it can be done if you have the right resources and the right group and community behind you.
Right on, Scott. Thanks, man. That means a ton. We're happy to have you on and really appreciate it. So again, a huge thank you both to you, Scott, and to you, Miss Izzy. It's been a pleasure meeting you, Izzy. This is our first time meeting. So
yeah, it's my first time meeting both of you, actually. So nice meeting both of you.
Thank you for being here. And it seems Daniel has claimed his prize. So congratulations, Daniel, on your 3 free months of TrendSpider. I hope you enjoy it. If you have any questions about it, hit me up on Twitter. My Twitter is @KrutzkyTrades. If you got any questions for these two, hit them up. I think Scott might respond faster than Izzy, but but that's okay.
Yeah, I'm the only person who down here that's like, don't talk to me, leave me alone. I'm kidding.
But I hope you guys have an awesome holiday. I hope everybody watching has an awesome holiday, and, safe trading. Be careful out there, trade them well. And, we'll see you on the next one. Hope you guys have a great evening.
You too. Happy Thanksgiving.
Yes. Have
Cheers,
a great
guys.
holiday. Thanks for
Bye.
having us, Jason.
Have a good one.